Hi everyone, so this is an update for September 14th, 2022, and I opened up a position, pretty large position in Netflix, and I want to go through what I see. So here in the trading view platform on the daily time frame, it seems like Netflix has got a lot of gaps, from its debacle, interest rate debacle, and there's an open gap at 507, open gap at 328, and I guess whenever the Fed decides to pivot, or these gaps will start to become real plays, but until that happens, we're probably just working with the gaps that happen within this range, right? Okay, so the first thing here is that if we take a look at the moving averages, okay, let's remove the gaps here. You can see that we have a confluence of moving averages. The 50, the 21, and the 6 and 8 are all clustered in this envelope. But the longest moving average that is acting like support is the 50, right? And I guess the purple one is probably the 100. If I had to take a guess, I can't remember which one that one. I don't really use the 100 that often. Yeah, so that's the 100. And then you got, in order for this company to act like a real FANG stock, it's going to have to make its way back up above the 200. But in the short term, what I can see, and the reason why I got into this with an aggressive, I know there's a lot of bearish people on Netflix. Definitely looks like a Head and Shoulders that's playing out, and it did kind of drop on the CPI data. But then it formed an inside day today, still trading under the 6, and then there's actually a TTN squeeze scanning on the daily. I want to point out, that there's some, the short-term gap. Like, I went through all of the data points in the pre-market and after hours on this leg up, and assuming that this is a wave 1 and then that's a deep 2, a very long extended deep 2, and then a wave 3 that begins to move higher, then this would be 4, and then we're off to 5, taking out to 251. So using a Fibonacci extension tool from the low to the high here, so that would be wave 1. You can see that that's wave 2, and wave 1, the equidistant move would be, I think, if I use this impulse wave, then, well, I guess this would have to be wave 1, and then that's wave 2, and then this is wave 3. So if that's wave 3, then we actually have a potential run up to 279 by October 17th. So earnings is nearing for the FANG stocks, and we've got this move that's setting up to run up. Most of the companies, except for most, have moved toward their 200-day moving average. Let's take a look at Google. Well, Google attempted it once, it didn't work out. Let's see, Amazon did. Apple for sure has, and it's overshot it. Boeing it had made its attempt. So it looks like each company is going taking turns to run up to their 200-day moving average. So I think it's Netflix's turn, since it does have a very well-known, back-tested characteristic of running up into earnings. So if I go into the intraday time frame, CPI data after pre-market, it flushed right all the way down to the 227, looking like it was going to go move to the 200 psychological target, but changing it down to the 3-minute, I was just taking a look at this. Was it on the 3-minute? Yeah, right there. Let me see if I can use the gap finder. You know, even the gap finder can't identify that gap right there at 231. Let's see. So this is something that is just found out right now. And let's take a look. That's the low at 231.50. The high here is 231.5. Okay, so there is no gap. Let's go down to the 1-minute. Oh, so you can see now all the gaps start to appear. Okay. Let's how do I hide everything here? Yeah, there you go. So you can see that there's a gap. I think that's a gap right there. Okay. Real nasty gap that you wouldn't be able to find unless you really looked into the details. It'll probably have some resistance around here at 228, and then just try to run it up here to 232, and let's see, that's the lowest, 231.51, and then the high here, that candle is 231.50. So the high, so 230 right there. So right in here, like right there is the gap. Okay. Now, if I were to use all my experience and brain power to try to investigate this gap, this is straight up fraud, and you can it's a penny. Okay. So most likely this is gonna bounce. So I took some positions. Now the trading. Okay, so here you can also see the attempt to flush it down to 200, right? Why not? We can also use the low here and the swing high and use a Fibonacci, and I bet you that it's probably gonna coincide with this 232.5 level. So let's do that. So what I'm doing here is I'm gonna model this low, the swing low to swing high, with the Fibonacci extension, and if I had to take a guess, that would probably be a 1618. Uh, 1.272. I don't know, let's just see. Oh, yeah, so it's 1272 and then a possible 235.7. I don't know, so it doesn't look like it's quite, didn't snap right to the wick there. So let's clean this up a bit. There we go. And what do we got? Right. Okay, so that's what I have going into the next 2 to 3 days, and also into holding the position over the weekend. I think we got a not PPI day. We have initial jobless claims tomorrow, and I posted in the Discord room that whatever the number is, it's just going to push the market higher. Okay, because the interest rates, I think, if I put up the right here, the Fed funds futures, right? So if it's already 100% priced in, then it's going to be 75 basis points, and then looks like there's another market where they're putting bets on the 100 basis points, right? But it's 100%. So this means that it could be greater than, and that's going to be coming from all the economic data between now and into Wednesday, I believe. So what I said here is that these statistics are pretty silly. I know if it's 100%, then it's definitely going to be 75 basis points. So then where's the 24% coming in? I think it's because there's just people with some sort of uncertainty about if there's going to be, if the data coming out tomorrow and maybe Friday is going to induce additional hikes, maybe raise them up from 75 to 100. So that's 24%. But if the unemployment is increasing, then you also have to take, obviously if you speak to most people, they're thinking very negative. But what happens if the data report tomorrow is really negative because of all the people losing their jobs? Then what about like a potential Fed pivot? Where are the bets on that? Where you have a 25 basis point move from 75 to 100, but what about the opposite side in case the data comes in really bad for the economy? Then that would introduce a probability of a 50 basis point, right? So that pivot is not being priced in, right? And if it's not being priced in, then the data, then all the indicators are pointing toward bad economy. Then you're gonna see stocks like Netflix, the interest rate sensitive stocks, just go nuts, right? And if it does go nuts, you're gonna probably see the trend drop all the way down to 0.5, and then it's gonna be a directional day, and then this gap is going to get filled pretty damn fast. So wherever it is right now, it's going to move up about 3.49% and possibly overshoot because of you have to keep in mind there's going to be that the media is going to start now taking off. Once we have confirmation tomorrow, I think there's one more report on Friday, I guess. But once you get more confirmation that the economy is going in the wrong direction, and the interest rate, the 100 basis points is going to be off the table, and 75 is going to be again 100%, and then there will probably be something or someone entertaining the idea of a lesser hike, so 50 basis points. So that would skyrocket these interest rate sensitive stocks like Netflix. So I think it's there is a potential to at least move up to this gap fill at 232. That's where I loaded up. So it's obviously you got this magic mic, just takes out this 228, then it's right up to 231 by, I would guess, 9:30 a.m. Pacific time, which is 12:30 p.m. Eastern time. And then if the trend is really low and the VIX is dropping, keep in mind the VIX has a gap at $20 still open with a NASDAQ gap, right? This is the funny one. On the daily, you can actually see a NASDAQ. I think you can see it right there. So there was a gap right there at 12,391 that came out on the CPI data. So we totally missed. That would have been a crazy trade had we. I did recognize the gap. I just didn't trade it. But now we've got this gap, okay, to worry about. And so where are we on the Nasdaq? So obviously crazy head and shoulders everywhere. It made its low here at 11,098. So let's just use a Fibonacci extension. If you studied the Wave 135 course that I teach for free, then you'll know exactly what I'm doing here. I'm just taking the Wave 1 right here from the low and swinging it to the high. And then pulling it back. So yeah, it looks like that's wave 1, wave 2, a choppy wave 3, trying to make it up to 14,193. We got a couple of this gap here leaves a lot of room for the market to rally at least 8%. That's massive. Okay, so that was a 5% drop. And now we have an 8% rally that would move it up to 13,250. This wave 135 is invalidated because wave 4 that sold off entered into wave 1 space. So this whole wave count is now invalid. So I'll use this as my new wave 1. So if we use wave 1 here, and then you can kind of measure that, you can see it pulled back to the 78.6. And if it breaks out above that high, which it's going to, right? Because there's a gap there, it's going to fill. Then you can see that the 1272 aligns very well with that gap, and you have all these potential targets for wave 3. Okay, so wave 3 will have some resistance obviously here at the gap at 13,220. Secondary resistance here because that's a double top. This is another, this is gap fill, so it'll consolidate there for a bit. This is a double top, so there will be resistance here. But if it breaks through that, which that was support turns into resistance, it won't break out. It won't break out on the first attempt. So I would not assume a wave 3, because if we're assuming wave 3, that would mean that this would kind of just move up. It would be the longest wave. So it will be the longest wave regardless if it moves up to here. That would be a good point where wave 4 will pull back and retest the previous support, right? Or previous resistance level, which is acting like support. And then move up to 14,724, which would be wave 5. Wave 3 can also be like this as well. Okay, we'll never know until it happens. So that's what I'm expecting. So this going into Fed, I think the Fed will surprise to the upside on Wednesday. That would be an 8% move from now till Wednesday. So you want to probably position into the best high-flying stocks, FANG stocks. I don't know about, Facebook will also fill its gap eventually too, right? It's not the greatest company to be trading. It's like, I don't know exactly what it's doing. It's become a Craigslist now. Instagram is basically its platform. It's too many platforms now. Yeah, that's what I'm kind of focusing on now. And then Tesla, I was planning to get into Tesla, but Tesla also has a lot of gaps too. And I think it's we got into the launchpad trade here. I closed off my position and re-entered it back in. It was pretty indecisive at the open, and I did have some weeklies which I should have closed off. I should have just let them go worthless because they ended up becoming worth a lot. But you can see that there's some sort of hesitancy for it to move and break out. But it does have like all these gaps that are kind of concerning. It does have this cup and handle, and I think I can assume that this is a wave one, because wherever it did pull back after this big move here, it didn't really get into the wave one territory space, right? So Fibonacci extension, and that would be the low. That's, I would say that would be the high. Right, so we could get into this level 345 on this earnings ramp up. So there are earnings. There's earnings and some other report, I think, in terms of their production. So the catalyst kind of favors the bulls, the short term. But whatever happens after earnings, I'm not quite sure. And also, there's a lot of there's that legal battle, right, that can introduce more headwinds as Tesla continues to grind higher. Okay, so that's pretty much it. I have QQQ calls which are drawing down, but I have them for next week, so I'm expecting a surprise to the upside, and then I'm also holding a very large position in Netflix. And I'm looking to get into Tesla, but I think I need to wait on that until there's a 7-8 minute TTM squeeze. There is just no 7-8 minute TTM. You can see a gap up here, which is a ginormous gap. 33%. That's not going to happen anytime tomorrow. So without a TTM squeeze, I can't really jump into this trade. It could obviously move higher on news that gets announced late night or tomorrow morning. I did not want to take that risk. I want to take the risk on, move my risk into something that has an A6. And I also have PayPal. Where's PayPal? And PayPal, it definitely looks like it's a candidate for a retest of that 200. So we got 8% move in the NASDAQ, and yeah, that makes sense. Like if the beta is 2, right, because I see 15% move and NASDAQ moves up 8, then for sure PayPal is going to move up 2 times that. So that makes sense to 60, and there's a lot of gaps along the way. Okay, so that's a big week. All the news and data that's coming into this week that the Fed needs to digest, that's probably going to play out to be a surprise for tomorrow, for next week. Okay, because we're probably going to head up higher, filling that NASDAQ gap at 13,250. Thank you.